Hello, everybody. This is Toby Gennaro, and I've got a good-looking group on today. So let's do a sound check real quick, as we normally do, and make sure that everything's working all right. So if the sound is coming across loud and clear, you can see the current splash screen. It says live technical analysis, market movers for today, October 24th. If you can see that, just give me kind of an electronic high five over that question box on your screen. That'll also be just a little tutorial on how to shoot questions over to me during the session today. These sessions today, when we're doing live type technical analysis, it's just very interactive. So the more you want to get out of this, the more questions you ask, and the more I can respond, and we can kind of develop a dialogue. And that's kind of how these. How you guys can get the most value from these. So great, thanks for doing that, you guys. Looks like everything's good. Chip, let's get the recording started, and we'll do a formal introduction for recording purposes, and then jump to the content. Hello, everybody, and welcome. I'm Toby Gennaro, and I will be your presenter for today. The topic for today is live trading with Nadex contracts. So I'm going to be talking through a series of specific trade setups in real time that I'm seeing in the markets and in the charts that we're looking at. So for those of you that are on the live webinar this morning, if you have any questions during the session, just type those into the question box on your screen, and I'll definitely be asking you guys some questions as well. So we'll keep it interactive. Just by way of formality here, let me put up this risk warning and disclaimer. Got to do this as part of the business. I'll leave this up for about 30 seconds or so. If you could just all have a quick read through this. What this is saying in brief is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody good with that one? We've got just one more disclaimer here from Nadex. If you can have a quick read through this one, it's a short one, and then we'll jump to the content. All right, very good. Let's get started then. So to kickstart your trading every Tuesday morning, utilize this regular feature from the trading team at Trade with Precision, delivered by Nadex. And with so much going on in the markets each and every week, the question here that we're trying to answer is how can we spot opportunities across multiple markets and multiple time frames? So join us weekly for this insightful live webinar where we will be focused on live technical and trend analysis across some of the major markets to help answer this question. So let's go ahead, jump into some of the live charts here, see what kind of trading opportunities that we can find for today. And before we do that, I took a look at a couple of charts ahead of time before the session this morning that I thought would be good to consider for some potential trading opportunities today. Let's go ahead and take a look at some of those. The two that I have picked out are going to be on the index markets, the S&P 500 and the Nasdaq. Normally the index markets, the equities move kind of in tandem, but they're really kind of two different setups here, and I want to show you both of those, and those will be some of the technical trade setups and the strategies I'll be showing you guys in the advanced session if you choose to do that. So let me just take a moment here to get my screens set up so you guys can see everything. You should be able to see my charts at this point, and what we'll be looking at initially, this is the Nasdaq. Let me go to the S&P 500. I like to start with that one first. A little bit of a broader market perspective. And so I'm just using some charts from the charting package that I use to trade with. The reason I'm doing that is because I can put up multiple time frames on the same screen. If you guys don't have access to any other charting package, the Nadex charting platform is actually very good. They've spent quite a bit of R&D and some dollars on putting that together, and they've actually got the indicative price information overlaid with the binary ladder, so you can actually see the key levels on where the binaries are interacting with the price, which is kind of nice. Really gives you a nice visual as to how to do that. So having an additional trading or charting platform isn't necessary, and besides that, Nadex gives you all of the data free, which can be a huge cost savings for you every month. So that's without further ado, let's take a look from the top down, as I normally like to do, and look at the monthly, weekly. Won't spend a whole lot of time here, but as you can see, the monthly, we've just been on a tear here for over the last year since we had that pullback into the buy zone. Actually, a couple of pullbacks within a 6-month window there. But once we took off here, I mean, the market has just never looked back. You can see it's just extended over the moving averages, and now it's getting a little bit, probably the most extension that I've seen probably over the past year, but still not a parabolic type shape. Anytime you see a top in the markets, you'll see that parabolic type of move where the market just all of a sudden just starts to shoot straight up, and it creates that kind of convexing type of slope. We don't have that yet, which usually is a pretty good indicator of the market putting in a topping. And so this is we're on a tail end here of an 8-year bull run, which by far out extends any 6 or 7 year tradition of bull market runs that we've seen in the past. But here on the weekly chart, you can see where all the setups are occurring here in the buy zone as the market just pulls back or it consolidates across in kind of a consolidation motion, then sets up in the buy zone with these candles. And then once the break of the high, you have the market taking off for then multiple weeks. So usually it takes a couple of weeks for the pullback, and then the market will usually run for many, many weeks. And that's what creates, the higher highs and the higher lows that you see in this traditional trend type of format. So right here, since we had the setup in the buy zone, the market has taken off for 3, 6, really almost 9 weeks. We're into this for a little over 2 months. We're into earnings season, and so that certainly impacts the equities and how they move. A lot of times they will consolidate within a range because the traders and investors are, maybe taking some risk off the table to find out what corporate earnings look like and those types of things. So that'll be going on here for another month or so. But for right now, the reason I'm looking at this is I like the trend here on the weekly. And so what I might do is take a look at some of the smaller time frames to see if there are any trading opportunities that I can align myself with that are going to the upside in the direction of the higher time frame trend, which is going to be the monthly, the weekly, and the daily chart. And you can see we just had a little bit of a sell-off here, but the buyers stepped in and created a really nice rejection candle right in and around that buy zone. Once we broke the high, we're back up to a new high, almost hit the 2580 marker there. It looks like we're trekking up to 2600, which is going to be the next big round number that has some psychological meaning and impact to it. But overall, you look at the indicators, everything is moving in conjunction with the price, meaning that we have higher highs and higher highs along with the indicator. So as long as the indicator is mimicking the price and everything's trending in the same direction, we have what's called convergence. Anytime the market is putting in a higher high and we have a lower high on the indicator, then that means there is some bearish divergence. Now, so even though we have a little bit of bearish divergence on the 8-hour chart, what I'm looking at is I'm looking at the formation of the trend, the higher highs, higher lows, and the price action looks very strong. A lot of nice small candles, which is just a good solid grind higher in the price action, which is always positive and indicates a lot of strength in the market. And then we have all the moving averages aligned and fanning out to the upside, the 200, the 50, the 20, and the 10. And that's really how we kind of, you guys have seen these sessions before. That's how we set up our charts. So for right here, if I was going to take a trade on this, I'd be looking at these bullish candles, these green candles setting up right here, and I'd be looking for the break of the high right up around this level. Just above, a couple of ticks above the high of those candles. And I want to see a closeout on this candle right here to make sure it's bullish. And then as the next one forms, I'll look for the breakout. But I'm really only going to look to trade that back up to the high of up around 25.75, 25.77, because more than likely that's going to start to set up more bearish divergence across some of the other time frames. So that's really as far as I would want to take this particular trade. As we move down to some of the other time frames like the 4-hour, you can see with this higher high, we've got even more bearish divergence across here. Really nothing bearish on the 120-minute chart, just the fact that the moving averages are all out of order, and it looks like they may be consolidating to a new level. So for right now, if earnings season holds true and we are going to get maybe a little sideways consolidation, maybe perhaps the 25.77 level might be the high, and then this level at 25.42 might be the low. And for the next month or so, we might see a consolidation sideways in the market, reflective of corporate earnings being released and all those types of things that typically causes people a little bit of indigestion, and they want to take some risk off the table and wait to see how corporations are faring and what the setup is going to be for the new year for 2018. And so that's kind of the thing that I'm looking at. So right here, the low of this is going to be right around that 2560 level. The high of that one candle, which we'd look for the break, is going to be 2569. Let's call it 2570. So as we go down and look at the Nadex contracts, I would be looking at here we are on the US 500, and I'm looking at the weeklies. And so right now we have 3 days left. Since we're looking at an 8-hour time frame, more than likely it's going to take several candles for that that movement to start to happen, which at least 3 candles equals 24 hours, which is basically a day. So I think 3 days is usually pretty good. That'll give us almost nine candles, which which is certainly a reasonable amount of time for the trade to work out. Usually the pullbacks take more time, and the candles that are going with the trend in this upward direction tend to form a lot faster, and they move a lot higher more quickly, because that's the setup that most investors and traders are looking for. They're waiting for that pullback so they can get on board again. So right here at 2570 is right around that level. We don't really want to go above 2577, so probably 2585 would really be the max that I'd be looking at, and it's certainly reasonable at $20. Even if the market just went to 2577, you could still probably make a 1-to-1 on that and get close to that 40 level. So that's certainly reasonable. The next one here would be right around 42. I like this one at 2573, because if we do move back up and retest that level at 2577, this one could be worth probably somewhere in the neighborhood of about 60. Well, actually 2577 would be 50. Maybe a little bit more than that, maybe upwards of 70 or 80, which would get us at least to that 1-to-1 scenario. And if the market hits maybe that 2580 level, then we might be able to have a little bit more profitability on that one. But overall, there are a couple of opportunities there. Some of these ones down here are we're not be able to get a 1-to-1. Normally, I'd like to do my buying below 50. If you're interested in trading some of these that are around 68 close to 70, I mean, the market doesn't have to go anywhere. All it has to do is just hold its current position, and as time value erodes, then the price of these will increase to that 100 marker. So if that's the kind of trading you're interested in, that's certainly an opportunity. The lower you go on the price, the less reward you have for taking your risk. So you have to remember that if you are going to do this kind of trading, your win rate has to be very, very high, because if you're risking 70 to make 30, you basically need kind of a 2-to-1 ratio. You got to have 2 wins for every loss, and that basically puts you at break even. And so you're going to have almost a 3-to-1 win to loss ratio in order to make money doing that. So that's kind of the scenario for the weekly. The weekly are going to be the longest ones. If the move doesn't happen by the end of the week, then we can look into next week at another weekly, potentially on Sunday evening or Monday, and then look for the full 5 days for the potential move. But more than likely, if it's happening on the 8-hour chart, as what we're looking at, chances are pretty good that this setup, buyers are going to enter the market and push this market back up to the top. And then I'm not really predicting a big breakout of that level, because I think we're going to be going sideways based on earnings season. All right, so anybody have any questions on the ES? We'll move over to the NASDAQ and take a look at that one, and then we'll wrap up the first half an hour, and then we can get on to the last half an hour. We can look at some specific markets that you guys are trading and that you're interested in, and then we can talk about those and look at the technicals and see what they look like. Now, usually these equity markets, we're looking at the NASDAQ now with those same higher time frames. Normally these markets kind of move in tandem. So it's not uncommon to look at this weekly chart and say, hey, that kind of looks a lot like what the ES looked like. And that's true, because these are all representations of You know, the equities markets, the Nasdaq, are a lot of large tech and services companies. The S&P 500, really, you know, a grouping of 500 of the largest American businesses. And so there are going to be some similarities here, but the setup here is going to be a little bit different. On the S&P, we're looking for a pullback into the zone where we were, but you can see we're not even near the zone on the Nasdaq. We just completed a flat level breakout of that 6,000 level, and we've had a number of solid closes above that level, which is good, which means if we do get a pullback into this level around 6,000, that is going to be a very significant level where buyers are potentially going to step in, and that's where you can see, you can't see them on the chart, but in the on the exchanges, there will be buy orders sitting at that 6,000 level, and as price drifts down into that level, these orders will start to be triggered, and that will cause the next reaction in price, which should be higher. So anytime we have a level of resistance like that that has not been tested, once we get solid closes above that level and then a pullback into that level, as you can see, the moving averages are catching up to the price, so a pullback into that level would be also a pullback into the moving average buy zone, just like we're seeing on the S&P 500, in conjunction with a very solid level at that 6,008, 6,010 level, which usually, when you get a combination of those couple of things, usually creates a pretty powerful move. So it just, you know, just remains to be seen, you know, what might be happening geopolitically in the world. You know, if we get, you know, something major happening around the world with, you know, military action or things like that, then, you know, that's the only time when these levels are typically broken on those pullbacks, because there's a lot of risk introduced to the markets that wasn't foreseen before. So this setup is based purely just on technical, without any geopolitical events, you know, interrupting that. So that would be one that I'm certainly looking at. Little pullback into that level, and as you can see with that most recent high, we are starting to have some bearish divergence on the charts, fairly significant, but normally with the weekly chart, these are very long-term, and takes a long time for these things to kind of shake out. So there's still some opportunity for us, you know, to trade that that type of scenario. And so understanding the higher time frames, now we can move down to the daily chart where we actually have a pullback into the buy zone. Okay, we have a nice bullish candle setting up, and so we may not get that pullback into that flat level at this particular moment. We might have another move higher in the market before we get that pullback, and that's what this daily chart is reflecting right now. So at the close of today's session, if that continues nice and green, that small candle in the buy zone, then at the start of the next candle, I'd be looking for a break of the high and then a move back up to that 61.30 level. And that's really, again, the only level that I would trade up to, simply because of earnings season, and I'm anticipating that there might be a little bit more sideways action in the market than there will be more continued stair-stepping in the upward direction. And so that's the only reason I'd be looking at that. Other than that, if we didn't have earnings season upon us, I'd be looking for a new high in the price action, and then just more higher lows and higher highs in price. So being that we have, you know, that set up on the daily chart, the 8-hour, as you can see, the moving averages are crossed over, so that cancels out the use of this chart. We did have some more bearish divergence here on the 8-hour, but on the daily chart, we have everything converging pretty well there. As we move down to the 4-hour and the 2-hour time frame, you can see how the moving averages are all crossed over to the downside. Actually, this one is almost looks like a bearish move to the downside, but based on the daily chart, buyers more likely are going to step in and push this market higher. And as we go down to some of these other time frames, we can go down to the very smallest time frame. And sometimes this is what I like to do when you're if you're interested in trading some of these shorter binaries, then what you can do is you can look down, get your cues from the daily chart and a setup on the higher time frame, that monthly, weekly, daily. And then while the intermediate time frames that we just looked at are still kind of angling down, the smaller time frames like the 15-minute, the 5-minute, these will all be starting to trend upwards. And so a lot of times you can find the beginning of some of these moves higher by looking at some of these lower time frames and then trading some of those closer expirations on these options. Like right here, we get all the moving averages laid out, and we're getting kind of a nice little bullish candle in the buy zone there on the 5-minute. And so we don't really have anything yet on the 15-minute, but price is in and around that buy zone. We just have the 50, the 20, and the 10 kind of sneaking in there to start that fanning out process. So I would anticipate if we get a bullish candle here in the next, how many minutes? Probably the next 9 minutes. We would then have a bullish setup on the 15, we'd have a bullish setup on the 5, and then I'd be looking at this next level here up around 6,088 as the next potential move. So basically another 5 points would give us probably another 1, 2, 3, 4, 5. It took us about 5, 6 candles to get down to this level on the pullback. So it might take us, 3 or 4 candles to get back up here, which might be, 20 to 30 minutes is all that trade would last once we get these candles closed out right here and closed out on the 15-minute. And based on these kind of setups, I want to have that setup on 2 time frames confirming one another. And so there's some things I'd look at, but let's take a look at the higher level, the daily, and give ourselves a little bit more time, even though we don't have a setup just yet that's looking fairly positive. So let's assume the market's going to be closing out at that level. Let's take a look at, let me just get in the high right here and see what that is. For right now, the high is at 60.89, and so we'll kind of use that level to determine our level for detecting some of these. Now, since we're on the daily, more than likely the only contracts we're going to be interested in are going to be the weekly, because it's going to be a longer term swing trade over multiple days, right? Because we'll need multiple candles on the daily chart to determine that setup once we get the close of today's candle. And once we get the close of today's candle, we're only going to have probably 2 days left on these. So, well, actually we'll have, that's not true, we'll have Wednesday, Thursday, Friday. So we'll have a good chunk of the 3 days. But right around 60.90 was where we were looking at. So we've got a couple here. 60.86 is still reasonable. Kind of still gets us into that 1-to-1 scenario where we're buying them for right around 50 and looking to hold them to to expiration. Some other ones around 42, 43, and then even some around that 61.10 level. Let me take a look again at that chart and see what the high was. If we get a move back up to that high, the high was right around 61.33. So that gives us a lot of options there. Even up to 61.34 puts us as high as getting in some of these binaries at around 18. And a lot of times what I like to do when you have a selection of maybe 4 or 5 potential contacts as a trade is I like to have a little bit of a mix and match of different risk levels. So I might be looking at something in the 44 range, which gives me a good solid 1-to-1 where the market doesn't have to move a whole lot and I have a higher probability of success, and then mix that with some of the other ones that have a little bit better reward or risk of something like 3-to-1 or 4-to-1 or 5-to-1 even. And then if the market really gets cooking and I'm right on the trade, then I have a chance to really do some damage here on some of the less expensive contracts. But keeping in mind that these are going to be higher risk because the strike price is further away and it may not reach there in the next 3 days. It may get there by next week, but by that time it's too late. So even though we're right on the direction, we may be wrong on the timing. And so that's why I usually like to keep them close, but I may just have a couple out here because a lot of times if the buying gets started, then sometimes the market can really get hot and move right back up and retest the most recent highs. And that's the chance when you have the opportunity to make some money on these kind of setups. Joe's got a quick question here. Let me respond to that before we wrap up a little bit here. What settings are you using for your charts? And so let me just go back to the charts and give Joe a response on that. We set up our charts with basically 3 indicators, Joe. We utilize 4 moving averages, the 200, the 50, the 20, and the 10. And then we utilize the MACD and we utilize the RSI. And so we're not utilizing any of these indicators in the way they're traditionally used. When price comes down and hits the 50, we're not utilizing that as a level of resistance. We're utilizing these 4 moving averages in their totality and for the way the chart sets up, for the direction of the trend, for determining trend strength, and for determining approximate zones where we want to buy and potentially where we want to sell. On the MACD and the RSI, we're not trading the line crosses, is what people normally do. We're actually looking for convergence between the indicator and the price action on both the MACD and the RSI. On the RSI, we're not trading the oscillator, the overbought and the oversold zones. We are looking for that convergence or divergence of the indicator along with or against the price action. So that's how we're setting that up. So we only have a couple of minutes left here. Let me walk through one last slide, and we'll wrap up the first 30 minutes. And then we'll go through and we'll be able to, for those of you that want to stick on for the last half an hour, be thinking about what markets you guys are trading, what markets you may want to look at, and then please shoot those over to me via the question box on your screen. And then in the last half an hour, we'll go through some of those charts and take a look at what the technical analysis looks like, and find out if there are any trades setting up on some of those markets that you guys are currently trading. So just in wrap up here, what Nadex is doing is they're really just trying to make an investment in your success as an investor. So what we did is we put together an advanced education package that's presented by Trade with Precision over several webinars, about 1 hour each over a couple of weeks. Don't have to go anywhere. You can watch these from the comfort of your own home. TWP trading team will be conducting these as live interactive webinars, so you have the ability, just like today, to ask questions about the content, work on trade examples and setups, those kinds of things. What we'll do is we'll teach you guys all of the ins and outs of the trade strategies that I've been using in today's session, all that technical analysis and price action analysis, and that'll help you get a little better handle on the details of how to deploy and use these strategies properly in real time. So this education package, it's valued at well over $900 if you bought it directly from us at TWP, but Nadex has subsidized the cost for you, so it's a freebie for any Nadex client with an open account. Pretty good deal for you. If you're on this webinar, you don't have to do anything. You'll be receiving an email invite the next time we're running the Advanced Education Series. Also, a couple different ways you guys can get in touch with us here at Nadex. Phone and email listed here for any questions that you might have, or you can ask me your questions right now using the question box on your screen. Demo accounts are also available to provide you some familiarity with the contracts and what we've been talking about today. These accounts are available for a lot more than 14 days. Actually, they're unlimited, so they never expire. Nadex realizes that these contracts are a little bit different, and people need some time to kind of look at them and watch them and understand how they ebb and flow and how they move. For some of you current members out there, if you'd like to begin trading again, go ahead and log into nadex.com. Take advantage of the advanced education webinars to kind of spruce up your technical analysis prowess, if you will, and this will help to take your trading to the next level. If you're new to Nadex and you'd like to set up an account, just go to Nadex and click on the orange box in the top right. It says sign up, and go ahead, fill in your details. Someone from Nadex will respond via email to get you started. So before you sign off, there is a short survey upon your exit. Please let us know your thoughts. And thanks for joining us. This will conclude the first 30 minutes of the webinar. Now, for you folks that are staying around for the last half an hour, this is where we can kind of get a little bit more interactive, and I can answer a lot of questions that you guys might have. We can also take a look at, whatever markets you're interested in trading. If you're not interested in the indices like we talked about earlier in the first half an hour, then, hey, we can take a look at whatever charts you want. Just key those into the question box on your screen and shoot those over to me, and I'll pull up charts, and we'll walk right through them and see what things look like. So let me pull up my charts here real quick, and while you guys are thinking about what charts you may want to look at, let me see if I can find some here that might be of interest. Actually,